Hey there, real estate moguls. If you've ever wondered how the pros make strategic moves in the real estate game, you're in for a treat. Today, we're diving deep into the art of real estate investing exit strategies, the secret sauce that turns properties into profits. So buckle up and get ready to unlock the door to financial success in the real world of real estate. Welcome back to All Things Real Estate and More, the go-to destination for all things real estate investing. I'm Dr. Brown, and today's topic is a game changer. We're talking about exit strategies, the not-so-secret weapon savvy investors use to maximize returns and navigate the ever-evolving real estate landscape. Now, you might be asking, why are exit strategies so crucial? Well, it's simple. It's about planning your exit before you enter. That's the real secret sauce. That's how we made it to $953,900 in real estate in 1 year, planning the end from the beginning. Real estate investing is not just about holding and buying and holding. It's about making strategic decisions to ensure your investments pay off big in the end. Whether you're a seasoned pro or just starting in the game, having a solid exit strategy is like having a GPS for your financial journey. It guides you through the twists and turns, helping you reach your destination with confidence. In today's video, we'll not only explore the importance of exit strategies in the real estate investing, but also break down some key strategies that successful investors swear by. So stick around, because by the end of this video, you'll be armed with the knowledge to choose the right exit strategy for your investments. But before we dive in, do me a favor, hit the like button, subscribe if you haven't already, and ring that notification bell so you never miss out on the insider tips we share here. Now let's jump into the world of real estate investing exit strategies. So what exactly are exit strategies in the realm of real estate? Well, think of them as your roadmap to profitability. An exit strategy is a predefined plan outlining how and when an investor will sell and dispose of a property. It's not a one-size-fits-all approach. Instead, it's a tailored approach based on the investor's goals, market conditions, and the specific property in question. Whether it's flipping for a quick profit, holding for long-term appreciation, or wholesaling to another investor, the exit strategy is the compass that guides the investor from acquisition to payday. Here's the golden rule of real estate investing: plan your exit before you enter. The success of your real estate venture hinges on your ability to foresee the end game right from the start. Planning your exit strategy from day one not only streamlines your decision-making process, but also helps you align your investment goals with the most suitable strategy. It's like building a house. You wouldn't start without a blueprint, right? Similarly, having a clear exit strategy is your blueprint for success, ensuring every decision you make contributes to the overall success of your investment. Now let's talk risk, because there's risk in everything. The omnipresent factor in any investment venture. Exit strategies are your risk mitigation toolkit. By having a well thought out exit strategy, you're essentially putting safety nets in place. For instance, let's say you're adopting the fix and flip strategy, aiming for a quick turnaround. If market conditions suddenly shift, having an exit strategy allows you to pivot without losing your way. It's about adaptability and being able to navigate unforeseen challenges. By mitigating risk through a thought-out exit plan, you're not just investing, you're investing smartly, safeguarding your capital and maximizing your potential returns. In the next section, we'll delve into some common exit strategies that successful real estate investors employ to achieve their financial goals. Stick around, because the insights you gain here could be the key to unlocking your real estate success story. And we have used all of these exit strategies because we have been investing for over 13 years in real estate. So let's kick things off with one of the most popular strategies in the real estate playbook, the fix and flip. This strategy is all about buying a property, renovating or fixing it up, and then selling it for a profit, ideally within a short time frame. It's like turning a rundown property into a showstopper and cashing in on the transformation. Investors who thrive on hands-on projects and have a keen eye for renovations often find success in this strategy. Now, like any strategy, fix and flip has its upsides and downsides. On the positive side, the potential for quick profits is significant. If you can add value to a property and sell it in a hot market, the returns can be substantial. However, it's not without its challenges. The cons include the risk of overestimating renovation costs, market fluctuations affecting the sale, and the time and effort required for hands-on management. Success in fix and flip demands a combination of market knowledge, project management skills, and a bit of intuition. For those considering the fix and flip route, here are a few key tips to ensure success. Firstly, thorough research is your best friend. Research the market to make sure that you are doing the right thing in the right season. Know the market trends, understand the neighborhood dynamics, and accurately estimate renovation costs. Secondly, have a solid team in place, from contractors to real estate agents. Building a reliable network can make or break a fix and flip project. Lastly, be prepared for contingencies. Markets can be unpredictable, so having a financial buffer and a backup plan is crucial. We did not plan for this inflation and rising interest rates, so you have to make sure you have that contingency plan in place. Successful fix and flippers not only transform properties, but also navigate the challenges with finesse. In the next segment, we'll explore more exit strategies, each with its unique characteristics and considerations. Whether you're into the hands-on approach of fixing and flipping or prefer a more passive investment strategy, there's a strategy that aligns with your goals and preferences. Stick around to find the one that suits you best. Now let's shift gears and explore a strategy favored by many seasoned investors, the buy and hold approach. This is my favorite approach. Unlike the fix and flip, buy and hold is a long-term game. The idea is simple: purchase a property, hold on to it for an extended period, and watch its value appreciate over time, and also collect rental income. This strategy is akin to planting seeds and patiently waiting for a tree to grow. It requires time, commitment, and a belief in the long-term potential of the property. And it also involves having the right tenants in those properties. Buy and hold comes with its own set of advantages and challenges. On the positive side, it provides a steady stream of rental income, which can be a reliable source of cash flow. And there's positive cash flow and negative cash flow. We want to make sure we're in the positive cash flow section. Additionally, over time, properties tend to appreciate, building equity for the investor. However, the cons include the need for ongoing property management, potential market downturns affecting property values, and the patience required to see substantial returns. It's a strategy for those with a more patient investment horizon. If you're considering the buy and hold strategy, there are several factors to keep in mind for long-term success. First, location, location, location. Location is key. Choose properties in areas with strong growth potential and increasing demand. Secondly, conduct thorough due diligence on the property, from its condition to potential future developments in the area. Thirdly, have a solid property management plan in place. This includes tenant screening, maintenance, and financial management. And there are actually software and companies that will do this for you, so that will take this job off of you of property management, and it's very inexpensive. Lastly, consider the financing aspect. Favorable financing terms can significantly impact the overall return on investments over the long haul. Successful buy and hold investors understand that real estate is a marathon, not a sprint. It's about building wealth steadily over time. So take your time, there's no hurry. In the next section, we'll dive into another intriguing strategy, wholesaling. So whether you're in it for the long haul or looking for quicker returns, there's a strategy tailored to your investment goals. Stick around as we uncover more strategies to add to your real estate investment toolkit. You never can have too many tools. Next up on our real estate journey is the art of wholesaling, a strategy that's all about connecting the dots. In simple terms, wholesaling involves finding great real estate deals and passing them on to other investors for a fee. A lot of times, this is a strategy for people who don't actually have the down payment to purchase a property, but they still want to be in the real estate investing game. So this is a way for them to do that. It's like being the matchmaker in the real estate world, bringing together sellers looking for a quick sale and investors hungry for lucrative opportunities. The wholesaler, in this case, profits from the margin between the contracted purchase price and the price offered to the end buyer. So, for example, if the wholesaler finds a house that's $200,000 and they find a buyer who wants to buy this house, they will actually list the house at $250,000. And the difference between what the seller wants and what the buyer purchases as, that middle amount is the wholesaler. So in this case, it would be $250,000 minus $200,000. So the wholesaler would get $50,000 as a fee for setting up the deal. Selling offers distinct advantages, especially for those with limited capital or looking for quick, low-risk transactions. So this means that the upfront investment is minimal, as you're not holding on to the property for an extended period, or you're not renovating the property. So you're just the one that's setting up the deal. Additionally, it's an excellent strategy for building a network and learning the ropes of the real estate market. However, wholesaling isn't without its challenges. It requires strong negotiation skills, a deep understanding of market trends, and the ability to build and maintain a reliable network of buyers and sellers. So all of these strategies require work. So this is not an easy in and out. this is where you need to do your research and then do the rest of it. For those intrigued by wholesaling, finding negotiating deals is the heart of the game. Firstly, master the art of deal analysis. Understand how to identify distressed properties, estimate repair costs, and calculate potential resale values. Secondly, build a robust network. Connect with motivated sellers, fellow investors, and real estate professionals who can be valuable sources of deals. Thirdly, refine your negotiation skills. Successful wholesalers know how to navigate conversations, build rapport, and create win-win situations for all parties involved, including the wholesaler. Lastly, stay informed about market trends. Being ahead of the curve allows you to spot opportunities and make informed decisions. As we venture deeper into our discussion on exit strategies, we're showcasing the versatility of real estate investing. Wholesaling with its unique dynamics is just one piece of the puzzle. In the upcoming segments, we'll unravel more strategies, each offering a different flavor for investors while diverse goals and preferences. So stay tuned and let's continue our exploration of the world of real estate investing. One of the foundational pillars of successful real estate investing, regardless of the chosen exit strategy, is conducting thorough due diligence. This means leaving no stone unturned when researching a potential investment. Before diving in, scrutinize property details, market conditions, comparable sales, and potential risks. Understand the neighborhood dynamics, future development plans, and any legal or zoning issues that might affect the property. By arming yourself with comprehensive information, you not only minimize the risk of unexpected surprises, but also make well-informed decisions that align with your exit strategy. And I have actually included in the details below a due diligence checklist. So this is a checklist that you need to make sure that you accomplish before you seal the deal. You need to do your due diligence to make sure you're getting the quality and of the property that you was promised from the seller. Real estate is a team sport, and having the right players on your team can make all the difference. Whether you're fixing and flipping, buying and holding, or wholesaling, having a strong network of professionals is crucial. This includes real estate agents, contractors, lawyers, and fellow investors. A reliable team can provide valuable insights, offer support in various aspects of the investment process, and help navigate changes. Networking isn't just about making connections, it's about cultivating relationships with individuals who bring expertise and synergy to your real estate ventures. The real estate landscape is ever-changing, influenced by economic factors, market trends, and regulatory updates. Stay tuned, stay informed is not just an advantage, it's a necessity. Regularly monitoring market trends, analyzing property values, and keep an eye on interest rates, because we know that they go up and they go down, and fortunately, they're coming back down. Additionally, be aware of any changes in local, state, or federal regulations that might impact your investments. Being proactive and staying updated positions you to make timely decisions and adapt your exit strategy in response to evolving market conditions. Flexibility is a hallmark of successful real estate investors. That's why it's crucial to continuously reassess and, if necessary, adapt your strategies. Regularly review your portfolio, assess the performance of your properties, and evaluate the effectiveness of your chosen exit strategies. If market conditions shift or if there are changes in your financial goals, you will be able and willing to pivot. The ability to adapt ensures that you stay ahead of the curve, maximizing opportunities and mitigating risk in the dynamic world of real estate investing. In our next segment, we'll explore real-world case studies offering insights into how these tips are applied in practical scenarios. So stay with us as we unravel the intricacies of implementing exit strategies for success in real estate investing. Some portfolio picks of houses that we have actually purchased, and we have different exit strategies for these properties. So I am going to share my screen, and we are going to look at some of the deals that we have actually accomplished in this last year. And this is a loan proposal that I am preparing a template for you all to also receive. All right. And that's me and my husband. We are the team who works on these properties. All right, so here are some of the properties that we have worked on, and this is our track record and method. So we had some properties in Louisville, Kentucky. where we were able to flip. This first one, we purchased it for $125,000. We put $50,000 in repairs. We sold it for $235,000 with a net profit of $60,000. Here's a flip. It is a triplex, also in Louisville, Kentucky. We purchased 3 units for $15,000. We put $25,000 in repairs, and we sold it for $115,000 with a net profit of $75,000. And then we started investing in South Carolina. So this is a duplex actually, and we purchased it for $121,000. We put $45,300 in repairs, and this is actually a buy and hold. So we have a monthly net operating income of $1,200. Remember, I said that there are positive cash flows and negative cash flows. And cash flow is the rent that you collect minus the expenses and repairs of the property and any financing. And what is left over is your cash flow. So if your rent covers all of those things and you have money to put in your pocket, then this is positive cash flow. But if the rent does not cover all of those things, then you have a negative cash flow. So we want to make sure we stay in the positive cash flow. However, some people are not afraid of negative cash flow because they are looking at the equity that the property is building over time. There's another property in South Carolina, and this is also a buy and hold. And we purchased it for $100,000. We put $10,000 in repairs, and we have a monthly net operating income of $700. And this property right here was actually a seller finance property where we put down 30% of the purchase price, and the seller financed the rest. And we were able to put this one on Section 8. And so Section 8 pays for all of the expenses, the finances, and we have an additional $700 that we receive in monthly income from this one property. This property here, another one in South Carolina, we purchased it for $130,000. We put $39,000 in repairs, and we were going to put this one on Section 8. However, when the markets changed and the interest rates and all of that changed, we ended up changing our exit strategy on this one from a buy and hold to a fix and flip. So this one is actually on the market right now for $189,000. So once that's sold, we will have a net profit of $59,000 on this property. And last, we have another property in South Carolina that we purchased this year for $129,900. This was actually a foreclosure, and we repaired it with $25,600, and it is a buy and hold, and we have a monthly net operating income of $400. So as you can see, over the last year, we have been extremely busy, but you can do this if you plan the end from the beginning. You know where you're going before you get started, and that is how you're able to be successful and to build your portfolio quickly. So I'm going to stop sharing. We're going to conclude our deep dive into real estate investing exit strategies. So let's take a moment to recap the key points we've uncovered. We started by understanding the fundamental concept of exit strategies, the roadmap that transforms real estate investments into profitable ventures. From fix and flip to buy and hold and wholesaling, each strategy comes with its unique set of advantages and challenges. We emphasize the importance of planning exit strategies from the beginning, conducting thorough due diligence, building a robust professional network, and staying updated on market trends and the necessary of continuous reassessment and adaptation. Now, on with this knowledge, it's your turn to take the reins of your real estate journey. Developing and implementing your own exit strategy is not just a recommended practice, it's the secret sauce that sets successful investors apart. Whether you're a seasoned pro or just starting, the ability to plan and execute effective exit strategies is a game changer. Remember, real estate investing is a dynamic field, and by proactively shaping your path, you're not just investing, you're architecting your financial future. So if you haven't already, please comment, like, share, and subscribe to this channel if you found value in today's discussion. Don't forget to show your support. Drop a comment below with your thoughts, questions, or your favorite exit strategy. Share this video with friends, family, or anyone who's diving into the world of real estate investing. Also, I have included below a checklist, a due diligence checklist for you to have when you are going and acquiring properties. When you have placed the contract on the property, there is due diligence that you need to do on the property to make sure you are getting the quality that the seller has promised. I am also including a link for a due diligence ebook. So if you're new to real estate investing and you don't know exactly what all the due diligence steps are, I have included a step-by-step guide and ebook for you to have in order to help you. So if you haven't already, consider subscribing to All About Real Estate Investing and More for more in-depth discussion, tips, and strategies to elevate your real estate game. Your engagement not only fuels the community we're building here, but also helps us tailor future content to your needs and interests. We're on this journey together, and I can't wait to see the success stories that unfold as you apply these exit strategies to your real estate ventures. Until next time, this is Dr. Brown signing off, wishing you a profitable investments and a future filled with real estate success. See you next time. Goodbye.